What's up everyone, welcome to a new investing video from PerFinEx, the #1 English-speaking independent financial planner in Germany. This episode of our community investing is called Better Than Netflix, because the chart you can see here is the Netflix stock price. The market's down, all portfolios are down, I'm not gonna lie to you, but hopefully after seeing this 45% drop here, you actually feel good about the performance of our community investing. Ready? Let's go! Let's start with the con investing news before the pro investing news this month, because we need to talk about it, and our 3 portfolio updates afterwards. With new changes, because of the market conditions, we made changes to all 3 investing strategy. Let's get straight to it. You can skip to whichever point you're interested in with the timeline here on YouTube. In the last video, I told you that the American Central Bank Federal Reserve plans to increase interest rates because inflation went through the roof in the latter half of the last year. This scared financial markets, of course, because the party we had over the last 12 whatever years with super cheap money that we got at virtually 0% interest could be over soon. And now everyone's waiting for the reaction of our European Central Bank. What are they gonna do? Will they increase interest rates as well? And if so, how much and when? There is a lot of uncertainty in this world right now, and financial markets do not like uncertainty one single bit. And the more uncertainty we have, the more people press the sell button. How do we, as rational and smart investors, deal with this now? We can do some of the work for you by implementing changes to the portfolios, and you can do something as well. What exactly? I'll tell you in a moment, but first let's finish the con investing news. Second major factor that is dominating financial markets is this whole Russia situation. Russia apparently continues to increase their troops on the Russian-Ukrainian border, according to US sources. Now, when talking about this one thing is important to me. Neither me personally nor PerFinEx GmbH is taking any side here. This is just a video of me telling you as objectively as I possibly can what's going on in this world and how this is affecting the whole community investing. Because we're trying to make the best return possible here, and for that we need to factor in what's happening in the world around us. And we do this as neutral as possible because we're only interested in the financial side of things. Let's just say we're Switzerland here. Neutral. Estonia is also saying that Russian fighter jets are invading their air territory. The UK is sending a little over 100 million to Ukraine to help them defend themselves, and Canada is sending troops to train the Ukrainian troops on how to defend themselves against Russia. Tensions are certainly rising here. Now, tensions are better than a full-blown war, but tension always means economic sanctions that are not good for financial markets. Because the Russian company Gazprom is exporting only half the gas they were exporting last year, which means Europe has a huge lack of gas to fill in order to not have an energy crisis. So the West will create in response some economic sanctions on Russia if these tensions continue. Then Russia will answer accordingly, and financial markets, as a result, will go down. And this brings us to the pro investing news. I'm not gonna make the world sound more beautiful than it actually is. The concerns that we were just discussing are real, and they hurt the growth of our investing portfolios. You'll see in a minute. There's no need to lie into our own pockets here. But when there's risks, there's also chances, right? Crazy that a German is not focused on risk, huh? And that's why I want to make an honest compliment to all you guys now. Not one single person contacted us saying,
The market is down now. I want to sell all my investments.
Very well, guys. You're really smart. I'm so proud of you. I even talked to some of you guys, and everybody wanted to invest even more because you think it's a good time right now. I kind of agree, but still, don't dump everything in right now and hope that the market will recover tomorrow. The current concerns are real, and if things escalate, the market could tank even more. So rather do the following, and many investors agreed with me on this point. Put in 50% of what you were looking to invest in right now, and then we'll see how the market develops in the upcoming weeks. And then maybe we'll invest even more. If you want to jump on that opportunity and invest even more as well, but you're maybe not sure how to exactly do it, reach out and we'll send you an order proposal from Fidelity that you can accept with ton. Alright, let's start with the high safety strategy that is investing in about 70%, 80% bonds all over the world, plus the rest is invested in stocks of different companies. Altogether, more than 5,000 different companies and governments all around the world. The focus is on high safety, and for this, we don't want to lose more than 15% from the peak. For this, we have to keep the German risk category of Wachstum, meaning growth in English. And with the newest changes we made, look where we are. This is as edgy as it gets. If we would exchange one more bond for one stock, we would probably fall out of this risk category. How did the high safety investing strategy do last month? Down, of course, by a little over 1%. And since the start in August, we're still up by 1%. Which I feel is a very good result considering the bumpy road we've been on over the last couple of months. There were also about 2% paid in dividends since August, which is excluded in the charts above. So the end result is a 2.8% return since August in our high safety investment strategy. Passive income is our investment strategy that needs no explanation, right? Focus is to invest in a lot of high quality companies all over the world that pay a reliable dividend, plus a worldwide real estate portfolio for passive rental income. Ironically, even though the risk category here is higher than in the high safety strategy, we are down only by half that much in the last month. Why is that? Two reasons. First is the interest rate fear that we talked about earlier in the video. That hit the bond market a lot more than it hit the stock market. And second is that almost in the lowest point in the second half of January, we made some changes to the portfolio structure. We increased US American tech, which got hit tremendously hard, like you saw with Netflix in the beginning. And this turned out to be a very good choice, which basically saved the return of that whole investing strategy. Everyone who invests in this passive income strategy can see it in your Fidelity interface that the February savings plan was different than before. So you're already invested in the new distribution and your entire portfolio will correct itself automatically with the next rebalancing. Since August, we are up about 3%. And you can see how much more volatile that strategy is compared to the high safety strategy. So, find your risk tolerance, guys. After the small dividend in December, January paid out quite a lot again, which is good because you guys expect passive income when investing here. Am I right? So the total return since the start in August last year stands at 4.22%. And last but certainly not least, our high return strategy. Our portfolio focused on worldwide megatrends that should outperform regular investment strategies over the long term. As you can see, these megatrends got hit in the last month. High return strategy is down by 5% over the last month, mostly because of the tech sector that took a tremendous hit after the great returns over the last couple of years. Since the start in August last year, high return is basically at zero return. Slightly positive because you got about 1% in dividends paid out. Again, great result if you ask me, considering how the markets behaved over the last couple of months. Hopefully for all of us it will get better though. If you want to join our investing community, feel free to apply completely online with the link in the description. Wish us all tremendous gains, happy weekend, and take care everybody.